What is going on, guys? Trying to, of course, this. Check. I think you guys can hear me. Let me know if you can hear me. I believe so. Anyways, welcome. As always, I'm doing the Monday morning kind of check-in. We got a lot of stuff going on. Big kind of move on Friday to really digest. Little echo. All right. I can move some of this other stuff. So, it's just me solo today. Hopefully there's no echo with that. Morning. Michael's in. Nick's in. Cool. So, if you're new, is that the right date? I believe so. Today's the 29th of August, and it's a big week. Yes, it is. So, before I get into this, I'm just going to hop into this disclaimer. We got a lot to cover. I'm going to go over some option stuff. Most of the people that are going to be joining this are also option traders. So again, please call 1-888-OPTIONS before you start trading and get a copy of characteristics and risks of standardized options. Cool. What's up, Tavi? Everybody's in. Just going to do a quick recap. So every Monday, what we do is really just kind of come through and check out what were the major headlines for last week and over the weekend. What do we need to, what's up, Devin? What do we need to, really look forward to this week, and what do we need to be aware of? So from an economics perspective, there was a ton of stuff. We actually have probably the most important data point coming this Friday. So just to note, last Friday we had probably one of the biggest moves I've seen in a really long time. And I mean, massive move. I thought that thing was gonna like chill out for a little bit, and I don't even think there was a single dip or bounce to really get into. Like you would have had to just like blindfold and buy put, and you probably would have been okay. But it was wild, and it was wild for a lot of reasons. Actually, the craziest thing was Friday morning, and that's what I want to start looking at. So last Friday, what we got was this PCE of personal income and spending, and so it's clearly all inflation, right? And I think the last time Powell had come up and spoken, the last time he had come up and spoken, he had actually he did say, hey, look, it's really hard to forecast a 6 to 12 month target rate, but he also did give a 3 to 3.5% Fed funds target for the end of the year. And there's a way to track that actually live. And as you guys know, the bond market typically leads the equity market. And we haven't really heard a whole lot about the yield curve inversion, but it is very much inverted at the moment. And what you really want to watch is the 2-year. I know everybody says watch the 10-year, but the 2-year, and we'll go over that. The 2-year Fed funds rate is actually the average, what the market is expecting the average rate to be. And that's actually sitting at 3.5% right now, which is the prior target. So why did we have that pop Friday morning? That's probably we clearing 420, which was a huge deal. And I know some people got caught buying calls out of the gate. And the second that speech really started to kick off, it was a huge turnaround in the market. I mean, massive turnaround. But the reason, one of the reasons why it could have popped right out of the gate was this personal spending. So what happened was actually consensus number was 1%, and spending actually came in significantly lower, which is actually good for the market. It's good for inflation, right? So the less consumer spending there is, the less inflation there's likely to be, and the Fed is doing its job in terms of increasing the interest rate and slowing down spending. So that's the info we had coming out of the gate, and then the speech happened. And I think what we can see, and I'll just go through some of these headlines, just getting into Powell. The biggest things that I took out of his speech, and what I think you should take out of that, was the market prices in a couple different things. The market prices in really the rate of increases that the Fed funds interest rate actually moves, and the faster it moves, the harder the stock market actually reacts to it. So one thing that he said that totally stuck out for me was that clearly, yes, there's going to be a lot of pain ahead. That wasn't a big thing. It was a very short speech, very, very much to the point. I think that was the biggest thing. But he said that rates are going to stay higher and he actually said through 2023 at about 3.5%. So what's different about that versus what the market had expected before was, yes, maybe the market was expecting this 3.5%, maybe even 4%, and this is Fed Bullard actually given 3.75 to 4% for this year target, was that the market was probably expecting that the Fed will increase rates and then we'll get to where we need to be and then immediately turn around and start lowering rates. And what changed in the speech was he's clearly not going to do that. And it was very just matter of fact, very nonchalant. This is our job. We're not going to, worry about the market. And honestly, that's part of the tactic in general. This week, we have a ton, and I mean like almost every single day we have a Fed president speaking. So there's the whole messaging campaign that we're going to get coming out of this. That said, I always try to find something that's cool, some kind of good news. So NASA, I don't know if anybody watched, there's like an Artemis launch today. NASA is doing a launch that could, I haven't looked at, the Lockheeds or things like that, but I believe some of those might actually move. Let me see if maybe Boeing. Yeah, look at that. So Boeing today, this is tradable news. So Boeing's moving right now. LMT. A little bit of a pop, but we're going to the moon. That's for sure. Anyways, so cool news on that. And it really just kind of goes right back to what we're talking about in terms of inflation. So the good news here is that if you guys didn't know, that September is historically like the bloodiest month of the year. And I wish I had some of these metrics. Maybe I can pull them up in a little bit. But we're going to take a look at that in a little bit. The other thing is we're mostly done with earnings. So we do have a couple. We've gone through 28 of the Dow 30 components. We have a couple more to go, but nothing this week. And for the most part, all of that's more or less behind us. What I do want to do is let's see. I grabbed a couple of these kind of screenshots, and I'll just do it this way. And if you guys are chatting, just let me know. So here's the S&P for like the last 100 years, right? And September is right here. Historically, the lowest month of the year. But there's a little kind of hidden gem. And where is it? Let me see if I find it. I had one of these guys up here. Sorry. It's a presidential cycle thing. So where we are is actually like right here. This is not the current chart. But this dip that we have coming up in a midterm election year is typically like the dip that you really want to buy in terms of this cycle. So here's another one. September. Any way you slice it, NASDAQ, S&P, all of that, pretty poor performing month for the month of September. But I'm kind of excited because it's like, this is the dip that you want to buy. That said, we had a lot of other stuff happening. I don't know if anybody saw like the student loan debt. We can get into that a little bit if we want to, but there's this constant battle that's going on between inflation, what's good for the economy, and the president kind of wanting to help out and really just kind of get his votes, right? So doing whatever they can to influence that. So in terms of economic stuff this week, it's pretty light, actually. It's pretty light coming into Friday. And what we want to pay attention to really is going to be jobs. NFP, so when we look at the charts, and I'll go back and show you this. If you look at like from a monthly perspective, every time you get a non-farm payroll, that's NFP, if you're not familiar, non-farm payroll number, that specific, the reaction to that number on the first Friday of every month typically determines the entire following month, and you can have a pretty clear expectation of what's to come ahead for the following month. So today we don't really have a whole lot. We do have a speech in a little bit. By the way, these times are Pacific Standard Time, so I'm on the West Coast, so apologies if you're not. You're going to have to make your own adjustments. Really nothing from an economic perspective, but this is where the massaging actually happens. So Powell, chief made makes his speech, and then all the Fed presidents come in after that and kind of do the rest of the messaging campaign. So really, what's important to the Fed right now is the market's perspective also. So they may not have to continually increase rates if the market is scared of that. Like, we may just do the job for them. And so we'll see. They just want to kind of keep it under control. Again, tomorrow morning, another Fed speech. We get some housing prices. Everybody knows that, like, okay, the housing market is complete shams right now, really just because of interest rates. Oh man, Boeing would have been a good trade. I'm just looking at that on my charts. So housing market has been in decline. We get a JOLTS number Tuesday morning, and again, 7 a.m. Pacific. I don't believe JOLTS is really going to move a market one way or the other. This is what this number represents is how many jobs are available for people to take. And we've been sitting somewhere around $11 million or 11 million jobs for quite a while. And it's kind of like leveling out between quits and people taking jobs. Wednesday, we do have 2 more speeches, but we also get ADP numbers. And, you know, historically ADP, Nick, housing is a mess. Historically, ADP was like a preliminary gauge to what you could expect for that following non-farm payrolls, but it's been a complete poop show, really. There's been like so many inaccuracies with the recent ADP numbers. It's just not even worth it. What I did want to show is, what are we on? Wednesday. What could happen? So right now, ADP employment change. This is June, July, August. If this thing comes out and this is Wednesday, mind you, the non-farm payroll number is actually Friday. If ADP comes out for August and is like some massive, million number, then that'll probably rally stocks for sure. Well, actually, I'm sorry, it'll probably be bad for the market, because what we don't want is a ton of people getting more money so they can spend more money. It's going to be one of those bad news is good news is bad news kind of situations for the market. Hopefully, if there's a lower amount of people picking up new jobs, and specifically, in certain sectors, like the last non-farm payroll number, and we could take a look at it, most of the jobs were picked up in the service sector. So like blue collar, line level type positions, that's where most of it has been. And we do get an oil status report on Wednesday as well. That's actually, I believe look at this. This is how much oil we went through, and this is how much they were thinking of. This is, the oil trade is still alive and well, but they are filling that back up a little bit. Thursday, again, another medium-sized day. So we actually got GDP last quarter, and there's one more to go. So the last time that we went through that stuff, the GDP, remember, I forgot who it was, but they were like, hey, look, even though this is the second negative GDP report in a row, we're not going to call it a recession, per se. And today this week we get the final iteration of what that GDP is going to be. And the reasoning behind saying that we're going to redefine what a recession is, and maybe it's not 2 negative GDP prints in a row this time, was because of the strong labor market. So that's why it's kind of this really weird balancing act. But the good thing is, I just think that the bottom was in. So, I got to think of, is it going to be a black swan event? No, right? Are we at peak inflation? We're probably at the peak inflation increases, but inflation is still very high, and that's really what we're dealing with. There is a lot of the, balance sheet reduction, things like that, but at the same time, we have things like student loan forgiveness going on that's really just going to kind of balance it out. So the balance sheet, it's going to be high. I don't know if it's going to be that big of a thing anymore. Friday is the big day. So last month we got 528,000 jobs added. So people actually went back to work. The majority of that, and I can pull this up, the majority of that was actually in some of the service sector. There you go. So here's a quick graph, right? And this is the wild stuff, right? So 368, 386, 398, and then boom, 528. And that was like market shocking. So nobody thought that many people were going to be going back to work. But again, here we are this week, and we're looking at a consensus of now 300,000 new jobs coming into the market. Actually, that number is fluid too, so as of right now, Monday, that's the number, so it may change. And if you're checking, like I'm just going on tradingeconomics.com, you can see that number change live, and the market will start to shift and like see how's the market pricing this in currently. So the other thing that's important to note is average hourly earnings. That's going to be, this is one of those things where like this is going up actually quite a bit, month over month, year over year. Yeah, I can just look, let me see if I can put this, it brings me to another screen. So here's our average hourly earnings. I don't know if you guys knew, but there was, yeah, look at this. Did you know that the average hourly earning for like white collar or middle class is like $32.27 in the US? I was shocked. And then this is like line level production, $27.57. I mean, that's pretty high to me. But this is one of those expenses for companies that is super sticky. So if this goes up and continues to go up, then for the stock market, for the companies included in the market, that's their cost of doing business. And so it's not like if you hire someone on, it's not like you can tell them, hey, a month later we're gonna lower your pay. It doesn't work like that. So if those continue to go up, that's gonna make it even harder for the economy to really fight that portion of potential inflation. Cool. So that's pretty much all I had on this guy for this week. Again, it's serious, like major Friday. I can move this back. And again, so Friday, unemployment, NFP, and that's what it all is really going to come down to. Maybe Wednesday when we get ADP, if that number is like wildly high or wildly low, we might get a little reaction. But for the most part, what's important is this, right? So I'm going to take some of these lines out, and you guys know how I do this. So this is a 30-minute chart when I'm looking at my charts, just to do a quick high-level overview for analysis. These orange boxes that I'll use, this is an average week's range. And so this is Friday. And so if this is an average week's range, Friday, we moved in a single session an entire week's range. Like that is unheard of. And we actually moved just below, here's where I had one of these kind of consolidation areas, just below here, right, which was that 4 on the low end, 406.73 is what I have here. And so this 406, 407.32 to me is gonna be a pivot point moving forward. What's important to note is that whenever you have a massive move like this, you should not expect like major consolidation, like major continuation. Whenever you have a massive move like that, the market needs to take a step back, breathe for a little bit, and really just say, well, what's actually happening right now? And so that said, I mean, I think that we could probably bounce a little bit more. I had a 413, so what it was right in here, 411. 411 was this prior point where the bulls really stepped in. We're fairly far away from that at this point, but if we do get above that for whatever reason, you really have to kind of flip bullish. And for now, if we do cross above 405, I think that we could easily target this 407 and then potentially all the way up to that 410, 413, which is the point of control for these consolidation zones. Other than that, if I take the same average weekly range and move it to the downside, let's say actually, because it's going to be more of a lighter week, I would put something like right here, not expecting the full breakdown. 405 is the major point right now that we have to deal with. So if we get close to that, that's where you want to kind of stop, take a look. 405.32 is what it is. We had this little gap. It was actually a gap this morning that we did fill. And we're still kind of battling with that. So for right now, if we come down, and definitely if we break below 400, I had this 395, which here, this is that last GDP report. So I marked these kind of fundamental events right here on my charts. So we had the first 75 basis point hike at 396. So that's going to be super important for me. And you can see, like, on this chart, this 30-minute chart, where did the buyers really step in? Well, they really stepped in right around 390, 395 and a half, 396. So if I get, that's going to be my first target for dip buys, if you would, or at least looking for a bounce. The very following day, we got that GDP report, and buyers, they bought it up one more time at 398.20. So these two levels in between here, this is going to be pretty solid, strong support for this week if we get there. And I don't know what this is going to look like, so I'm just going to move this guy forward just a little bit. This is a ways ago, huh? Yeah, and it's right here at the low end of what an average week's range would be. And I think, again, this week we kind of just put this smack in the middle. I hate to say it, guys, but this is looking like a very choppy, trendless type week right now. But what's good is that you should know that that's what's going to happen, and that's what's likely ahead. So don't take any major positions. I have a little snow on still. I still really like SLB. I still am picking up some Freeport. I still think this oil and energy sector has a lot of room to go. As much as people are like, there was a headline actually this week where, I think it was today, where Elon comes out and says, hey, look, oil's not going to go anywhere for decades to come. And let me see if I can find it. I got some Netflix stuff. Anyways, yeah, I was watching the news this morning and that popped up. I'm like, yeah, there you go. So it's one of those things where we'll have a lot of alternative energy situations happening, but we're coming into winter, and that's historically one of the months that you have a good headwinds in front of you in terms of energy. So Nat Gas is another play too that we'll take a look at. So that's the targets on SPY for the week. I think, if you want to do your iron condors, things like that, the VIX just tagged 28. If we have one more down day, we go straight to 30, and at that point, that's really when your kind of neutral strategies will actually be pretty juiced. Right now, you guys can see, like, this is barcode central, so nothing's moving like massively. The only thing that had the biggest move was oil this morning, right here. So this is crude futures, and also always on the watch right now is the Dixie. So the Dixie is the dollar index. If our interest rates are higher than, let's say, global interest rates, this is kind of like your risk on, risk off meter. Anything over this 109, if we get over 109 on the Dixie, then yeah, we are clearly going in a downtrend. But with the dollar pulling back right now, this looks more like a kind of like hold, wait, market's going to need to digest. And so that's absolutely what I would expect. I'm just going to draw some quick lines here, just kind of like a broadening range. This would actually be, if I get this, then that would be more like, let's buy across the board. And then this would be you're selling. And then the average in here is going to take this kind of zone. Oh, this is not giving me a volume profile because there's no volume on this. That's right. Well, it would be right about, and we could see it here. See where they're stepping in. 1, 2, and where it really broke out. 108.39, 108.390. So if the Dixie can get below that, then I think we can make that move back towards that like 310 level, right, 410 level, give or take, but not before then. Anything in this zone right here, we're chopping. So expect kind of choppy, trendless trades for the beginning of the week, definitely. If you guys have any charts that you do, BTU Cole, got it, cool. Yeah, if you guys have tickers that you want to take a look at, now's the time to go ahead and send them while I finish up this part. So this is the 2-year yield that I wanted to bring up also. So this is the yield on the actual bond. So you just search in TradingView US02Y and you'll get that chart. And so remember, if the target is 350 for the Fed funds rate, this 2-year yield represents what the market is expecting the Fed funds rate to be trading at, right? And that's about 3.4 now. I think Bostic said 3.75 to 4. So here's one, definitely, I'm just gonna mark this level. If we break this, okay, so we're gonna take that next leg lower, most likely. And I'm not expecting major legs, right? Like that's what's important. I think it's just, they're gonna be very small, kind of methodical moves after this kind of a complete and utter sell-off. Like that's massive. The top of this average range, by the way, this is, I'm tagging this kind of like fair value area where the back half of the day we just completely sold off. So that's at 409, give or take. Yeah, right now it looks like we're just gonna chop. We may chop down to this zone, who knows. 3 points in a day is quite a bit, but Monday we sometimes get the move. Yeah, VIX bouncing up off of a pretty key level. Dixie broke structure, looks like it wants to move higher. Yep. Danger, guys, but not major stuff. Just be patient. So NVIDIA 160 level play. Okay, we can take a look at all these. So when I go and I look for new plays, I have a different screen. It's not necessarily this 30-minute interval. It's always got to be multiple time frame analysis, right? So I'm gonna take Nick's first. So BTU is Peabody Energy. He's been all over this thing. So clearly tagged this little top right here at 29, right? So we gotta mark that across the board, right? So this is, we gotta sync this. And this is where it's like, well, this is a pretty strong trend. If I took this at a fib, right, so 24 would be your retrace, and I'm liking this level right here. It's got to be on a pullback. If you can get it to 24.50, that's where I would really start to look. But just on a daily perspective, you can, I mean, if it's over 27.50, you're going higher, period, right? Nobody's gonna argue with that. And that's actually got a pretty good target because that would be straight to 29. So that would be your kind of breakout situation. If one of these days, let's say tomorrow, it opens higher, you're right there. I think this. Yeah, if it breaks yesterday's close, it's gonna try and reclaim this higher end. So that's clean there. For the most part, right now, just kind of like chill. Those are your levels. If it goes below 25.96, it's just obviously going lower. And that's when you're looking nearer towards 24. It's only a couple dollars here and there. It's massive upside for sure. Take a look at this guy. 22.50. Yeah, so this was your major break. Yeah, I'm liking this 24 and change level. I can get a bunch of levels of confluence there. Yeah, about around 24, I would really look for it, realistically. Cool, so, BTU. I don't know if it's. I'm just gonna look at BTU, Nick. Michael's asking for Oxy. Oxy is another one. So oil. So this is one where you want to come back to this oil chart. So this is CL or crude futures. I don't necessarily look at USO, which we can, but the futures contract is actually crossing up over its 200-day moving average, and that's going to be a big deal. So it first rejected, came back quickly, and this is a very, very small pullback, really. Right on this 50% level, right here, bounced, and is immediately going. So around the 200-day moving average, just remember, things like to chop a little bit, so you might get a quick pop up to the upside here, just like this, right? And then you could get a fast move down. This is going to be a pretty big deal in terms of those stocks. Actually, I had a trade on XOM this morning, like $100 calls out of the gate. Those things flew, man. So oil was definitely moving today, no question. Oxy specifically, what I would say is that, part of this was news driven, and a lot of it was like, Warren Buffett was approved to buy a whole lot more shares, but it doesn't mean he's going to. So that's really what I would say. Right now, if you're over 70, and this is my level 73.90, just around 74, this is where they were stepping in before, right? So 74 here, 74 is your breakout level, 74 is your breakdown level. You have a huge push this morning. I think this is going to try to become some kind of support. So in the interim, is it going to be that kind of breakdown? I don't know if you caught this out of the gate, that's great. But I don't want to trade a whole lot of bull flags in the market, especially with IV where it is. It's just got to be at this point, it would be 80 calls if it's trading well over this level. See if I can get session volume in here. Yeah, so your point of control on the day is 76 right now, and this is actually pretty important. So 76, what is that number? Yeah, about 76. If it's below 76, it's not going to make new highs on the day, and it's kind of fighting with it right now. So could it pull back? Yeah. You got this pivot right here, 74 and change, which is kind of like this mid section. And something like this on the day, I would honestly, knowing how volatile oil is going to be, give or take, that 75 level would be your typical retracement and what you'd be looking for a bounce. But if it gets rejected, you're trading back down to the low, down towards this next level, 70. For me, like Oxy, and you have to look at a larger time frame, where you can see Buffett buying is right here. Right? It's like 58. So all of this, boom, boom. These are his buys around like 55, give or take. We're nowhere near that anymore, but we'll see if this news situation holds. I'm not shorting this guy, though, no way. For now, you got the 74, which was the prior high, breaking through, bouncing up. I like to see on a daily chart, I like to see a candle clean above that type of resistance. So tomorrow, if it opens above 74, holds above 74 all day long, then the next day, Wednesday, if it opens clean above that, I would be looking for a long, but not actually before then. Weekly looks really good though. Can't really argue with that. Upside targets would be, if you do get that, right in here, 82.30. So there's not a ton left in this guy, so I'm not really trading it. And IV's gotta be, it's gonna be pretty important. Yeah, this 80, around 83, just under 82, or just over 82. This is a major level. You see it here, breakout here, support, breakdown, resistance. That's your upside. It would be like $80 calls. Cool. NVIDIA 160 play. All right, let's take take a look and see what you're talking about. Sorry, I got lots of lines on this. So NVIDIA is well beyond a trigger short, which I think some of our guys actually, yeah, of course, our guys actually took this short Friday. It was Excalibur. Dude just nailed it out of the gate on this kind of breakdown below 175. So 175 was really your trigger short, and then like double for sure. That once it broke below that 172, it's not coming back right now. It tried to make a base over around 180, I believe. So it's this yellow line. So what on my charts again, these are the monthly highs and lows. 180 was a level where it was trying to kind of create this base. And essentially what happened when we got to that, close to that level, again on Friday, and it failed, everybody who was picking it up right here just sold it. And that's what happens when you get this kind of move. So 160, I don't see a level. Here's what I'll show you as my level. So for me, if I'm gonna grab a level, it's gonna be these bottoms right here. So this one, this. So this is about 155, actually, which we're really close to. And 155, by the way, would still be a higher low, and you're still trading in this giant consolidation zone. So 155 would be where I start looking for those, I'll say a 2 to 3 candlestick setup. If you use the strat, they call them the combos. It's not anything new. It's been around for forever, but you can see clearly that right here at 150, just around 155, this is where they were picking it up before. And that would be a target if you were short. So 150 would be the real low end. Picking this, well, that one kind of set up already. So I'm on a 5-minute chart right now. Just gonna take the next tag, 152. So between 155 and 152 is where I'd really be looking. 160, I see what you're seeing here. Just so you know, there's a gap right here. 165 was a profit target. I think we're below that. 158.21. And when I look for gaps, I'm looking for gaps including after hours. So this includes pre-market, after hours, gap right here, clean gap. Never touched it. So 158.30, you have a gap to be filled. Right there. This is just like a little gap tool in TradingView. New. Oh, looks like we're filling it right now. So I guess, there you have it. So that gap's being filled as we speak. So maybe that's what you're looking for. If it bounces here. But that kind of momentum, I think it bounces. This is more like a 24, 36 hour trade, and you're really just going back to this level, just like SPY towards that fair value. Yeah, your ideal short on this is all the way up at 175. So I don't, unless it triggers new, maybe down to 152, but it's not a trigger short right now. That's for sure. Say over 159.50. Yeah, that's probably where you're getting that 160 level. And then you're really just trading to 163. Calling it quits there. And you have to be aware that this has already come into play at 163. Here. So that's going to be some pretty serious resistance. Looks like it's a pretty clean level too. 163-ish. So yeah, if it breaks above that, then yeah, you could take another look-see to fill this kind of fair value area, which would actually be more like to 173. Not bad. Oil plays, yeah, I'm in all kinds of oil plays. SLB is probably the biggest one. Took Exxon this morning. Chevron looks good. We could take a look at Chevron too. Freeport is rebounding. I don't know that it's ready for a big, giant position. I still like it, but it's still just like building shares position and kind of nibbling at some shorter dated options. I think like shorter dated as in this month's 32s something. I did see some Octobers go out, but it looks like they were mostly selling the October Freeports, and that's a copper squeeze play. October Freeports was 34 calls, 1,300 volume today on 2,500 open interest, but it looked to me like they were selling them out of the gate, probably just kind of scared. So today, 20,000 calls versus 11,400 puts. I might have to take that back. Sometimes if I'm looking for trades, I'll go to this bar chart. Oops. I don't know what's crap. You guys are supposed to see emails and stuff. Let me see if I can log in. Yeah, here you go. So like I might go to a bar chart, go to options, unusual options, and then see what's the biggest trading. So XE calls, okay. FedEx puts, I know one of the guys was looking at FedEx today. Looks like we're gonna curl up here. Yeah, Tesla, DraftKings, puts. Not seeing. Here's Oxy. Oxy was 75 puts, traded for the 9th. This is actually a super useful site if you're not used to it. Yeah, NVIDIA 160, 160, 250 calls. And again, this is shortest dated expiration, so they're just targeting exactly what we just outlined on NVIDIA. This is Lotto Leap for sure. 6/16, 2023 for 95 call on Oxy. 1,800 volume. I don't know what to make of that. Ford 13 puts. Yeah, I'm not really seeing. So FCX. It's not working. Yeah, most of the volume on these, they're all the way out. 615. Highest traded call on Freeport. 1-to-1. This is. Oh, this is just the date. Anyways. There it is, 32 calls for this month, right? 3,400 volume. And 33s for way out to November. This looks just like a debit spread, buying 32s, selling 35s. Nothing crazy. This was the one that really stood out to me, was this 1,100, but yeah, they might be rolling into some of these debit spreads. Anyways, that's what I see on those. Yeah, NVIDIA's kind of making the bounce. You're welcome, guys. Cool. Awesome. I think EPD. I don't know what this is. Might have to hit me on this one later. Not familiar with this guy. It's not horrible. What is this? Oil gas. Yeah, I mean, I like the sector overall. Honestly, the biggest, like if you're looking for an actual investment, EOG is probably your safest bet across the board. This is a big boy, oil and gas right here. Doing super well. Strong financials. Pretty good. Nat Gas transfer. Okay, got it. Do you ever do classes on your Discord too? Oh yeah, Jonathan. That's all we do in our Discord. Yeah. But yeah, and I do it. We do it in other servers too. So we'll have actually classes coming out soon, very soon. So we just finished one of the kind of like trading foundation series, and if you guys have any requests, throw them in the comments or just DM me in the servers too. I'm thinking we do something on volatility and a little series around that. Boeing is moving right now, by the way. That looks like a live trade here. And that's news driven, so that's tradable to me. For sure. Especially if we get over this. That squeezy heading into that 200-day. Man, Boeing's just a day trader though. so gappy. Yeah. Awesome, guys. Cool. All right, that's it for me for now. NASA goes to the moon today. Freeport, the copper squeeze is on. SLB is building right back into that position. Anything under 40, I'm buying. SPY looks like it's heading up to 405 plus. So break above that. Looks good. Small moves this week. You know, take profits at like 25, 30% if you have it. Don't shoot for like the moon right now. It's little moves. Take profits quickly and trade safe. Keep those position sizes small till we get later on in the month and really find out what's going to happen after NFP on Friday. All right, guys. It's been real. I'll catch you on the next one. Oh, and then if you follow on Twitter, it's Paper Gains Inc. Twitter at Paper Gains INC. I think I'm going to hop on. My buddy Wolf does a handful of these Twitter spaces. I'm on those all the time, so I think I might hop in for a power hour shift. And then Seeking Alpha sponsors a couple spaces with me Tuesday mornings and Thursday mornings also on his Twitter. So give it a follow, and I'll see you out there. Adios, guys. Later.